Hi everyone, Crypto Watch here with another video with a new strategy. Last time in the last video we talked about the order block strategy and how to spot the order blocks. In this video we're going to be spotting the order blocks, but we're going to combine that order block with a 4-hour FVG. So we're going to be spotting a 4-hour FVG, and then we're going to go to a lower time frame, which is 1 minute chart, and we're going to spot the bearish or the bullish order block, and we're going to take the trade from there. It's going to be a really simple and a short video, and we are going to be talking about how to combine the order block strategy with a 4-hour FVG and be profitable by combining both of these strategies. So this strategy also works for scalping as well as swing trades, depends what the market bias is. But today we're going to be talking about the scalping example. So you can see we've got the Ethereum chart right here, and the 4-hour FVG created by Ethereum is right here. So just in case, if you don't know about the FVG's fair value gap, the price on the chart moves so quick that it leaves a massive gap behind, and that massive gap is filled with all these orders. It could be a bearish FVG or it could be a bullish FVG. So in our scenario at the moment, we've got a bearish FVG formed right here. So as you can see, the FVG is created by 3 candles. So bottom of the first candle, as I've marked here, and the top of the third candle, marking right here. So this is our FVG marked. Now what we're going to do is we're going to go to a lower time frame. I would prefer 1 minute time frame for scalping to spot the sniper entries. So after going to the lower time frame of 1 minute, what we're going to see, what we want to see, is the price on the 4-hour chart making an FVG, and after that rejecting. So as we can see, we had a 4-hour candle close, and then a new 4-hour candle which came up to our FVG point, and it rejected, fall back again. Now what we're going to do is we're going to wait for a 1 minute candle on the 1 minute chart to come back to a FVG bearish order block. So as you can see, the price rejected from here, which is 25.01 on Ethereum, and the order block for the 1 minute time frame was here. If you look at our previous video, we've mentioned how to spot the FVG, the order blocks on all the time frames. So basically, it is the 2 candle formation before the move towards the upwards or the downside. So in our scenario here, the market bias is obviously bearish, and if you're looking for an entry to go short, and there's a formation of FVG, there's when we can implement this strategy to have a good win rate. This strategy has been backtested by myself quite a few times, and it's been really profitable for me. So we're going to see this order block and the price moved from here to here. After that, we waited for the order block to form. A lower low was made on a 1 minute candle. And after that, we're going to wait for the price to go back up to the 4-hour FVG. So if you're going to mark the 4-hour FVG, you can mark it through a rectangle, or you can go with a trend line, whatever is easy for you, or whatever you use in your daily trading. You're going to mark it red. Right, so this is our 4-hour FVG. We don't need the trend lines or anything, whatever is easy for you. So we saw the 1 minute chart, the price ejected from the 4-hour FVG, and we waited for the price to come back to the 1 minute bearish order block. We marked our order block here. So the entry that we're going to mark in this scenario is going to be a short entry. So our entry was supposed to be, I'm going to mark the entry real quick here. So the entry was at the bearish order block. I'm going to zoom that in a bit. Bearish order block was formed. Our limit order in our scenario, it should be back here. So the price ejected, came back to the lows. We marked our entry for the limit order, and this is a scalping example. So we're going to put our stop loss right above the bearish order block, and then we're going to go to a 15-minute or a 30 or a 4-hour chart to spot exit. In this case, I'd say whatever you can target the liquidity, you can target the bullish order blocks, whatever's easier at the time of the entry. So in our scenario, if we've got this candle here, this green candle closing, I'd say this was a good exit point. So we're going to mark this one here real quick with a horizontal line. Now if you come back to the 1 minute chart, we're going to be marking our take profit. So as you can see, we've got the entry right here at the bearish order block, and then the exit at the candle close of 1 hourly in the past. So this strategy works most of the time. It also depends on the market bias, if the market is bullish or is bearish. If the market is bullish, we should definitely be targeting the 4-hour bullish fair value gaps. If the market is bearish, I'd go with the 4-hour bearish fair value gaps. So this is a good example for scalping. We can also use that for swing trading, day trading. It all depends on the market structure. So you will be mastering this strategy by applying it in your demo trading or your paper trading, by back testing this strategy. And you shouldn't be jumping in the strategies without testing them and without a risk assessment, proper risk management. Well, that was it for today. We'll see you in the next video with another good strategy for trading. Thank you and take care.